Indonesia's central bank has cut its growth forecast for the Indonesian economy, largely because of the global ructions caused by the war in Ukraine. It also has a watchful eye on inflation while keeping its benchmark interest rate at a historic low. Saiful Bahri Ismail joins us for more on Bank Indonesia's latest economic pronouncements. Well, Saiful, what is behind Bank Indonesia's lower growth forecast for the year?
Well, Indonesia's central bank has trimmed its growth forecast for this year between 4.5 and 5.3%. Previously, its forecast was between 4.7 and 5.5%. Now, Bank Indonesia said its lower growth forecast for the year was because of the slower global economic growth and a disruption in global trade from the Ukraine-Russia war. Last month, the International Monetary Fund also trimmed its economic growth forecast for Indonesia in 2022 to 5.4%, down from 5.6% previously. Now, Bank Indonesia said economic growth in the country depends on the volume of exports, which is expected to be restrained by the lower global economic growth and global trade as a result of the protracted geopolitical tensions in Europe. However, Bank Indonesia said domestic economic growth will be spurred by the increased mobility due to further relaxation of travel restrictions in the country. The government has allowed the annual exodus of mudik this year after banning it for the past 2 years. More than 80 million people are expected to return to their hometowns ahead of the Eid celebrations. Bank Indonesia is also keeping a close eye on inflation, which is still within Bank Indonesia's 2 to 4% target range. Inflation has increased the cost of cooking oil and everyday favorite food like the kerupuk, the deep-fried crackers usually served alongside every Indonesian meal.
Bank Indonesia akan terus mewaspadai sejumlah risiko inflasi, terutama dampak kenaikan harga energi dan pangan global terhadap perkembangan harga-harga di dalam negeri. Bank Indonesia tetap berkomitmen menjaga stabilitas harga dan memperkuat koordinasi kebijakan dengan pemerintah melalui tim pengendalian inflasi baik di pusat maupun di daerah.
Well, Saiful, this is coming at a time when the government is looking to roll back price controls on items like food and fuel. So how might BI's latest prognosis play into the government's effort to control its current account deficit?
Well, Bank Indonesia is lowering its current account deficit estimate to between 0.5 and 1.3% of GDP in 2022. Previously, its estimate was between 1.1 and 1.9%. Now, Indonesia stands to benefit from surging commodity prices, and its exports have risen to record highs. Analysts said an improving external balance will provide Indonesia with a cushion to confront global monetary tightening, including aggressive U.S. rate hikes, which in the past had triggered capital outflows and volatility in the rupiah.
Well, thanks for that, Saiful Bahri Ismail there in Jakarta.